Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for the 17th of January here in 2023. Let's take a look at some big turning points for the market. First is going to be our COVID lows, the lockdown, the pandemic lows. That's early 2020. And the market at that point was about 2,200 SPX, all the way to 4,800 as we started 2022. That's the high. Since that point, the market's been in a steady downtrend. Downtrend as noted with a series of lower lows and lower highs along with falling trendline channels. That's the structure of 2022. We're in 2023, and the thing I want to highlight is whether or not we're going to have a continuation of the downtrend, which is our pivot point right here, right now, in the middle of January. And if so, that does have another swing to the downside. Swing just means a persistent movement in price. Why might that happen? We've had 1, 2, 3, 4, 5, almost 6. We'll count that as 1. We'll do a 2, a 3, a 4, a 5, and a 6 of periods where the market has intersected or traded up into, to me, it's the falling trend line, but it's also that 200-day simple moving average. And each time the market has traded down from it. So will this time be like the other 5, or would it be different? That's the same question we've asked at each of these turning points. And until we see a difference, I'll keep betting on the downside. In other words, this time is not different than the others. But we're traders, we're not forecasters. So that's what I am watching as we go through January and positioning into trades for the short term and for the swing account. And for me, that's going to be off on the downside from 39, really 4,000. The risk reversal. I've used that word in prior updates. The risk reversal. Just think at the prior times we had this. This is going to be the risk. The risk being that this time is different and we will have the breakout versus the reward. And the reward is that we go off and trade down to new lows. In other words, toward the downside of this falling trend line. And that'll take us right now to about 3,200. But we won't get ahead of ourselves. We take this day by day, week by week here in TheoTrade. So let's start there. The risk is going to be for a breakout and a reversal against the reward of a move to new lows. Might this play out similarly on the NASDAQ? Well, the NASDAQ has already achieved those lows as we started the year, and its price on the index at least has been up, and its pivot point is 11,000 on the NASDAQ. The two equity futures that are different, and they are different, it is the Dow. So keep those points in mind. There's the COVID low, it's about 18,000, and there's the COVID high, COVID high, that's the recovery or the expansion high. That's a double, almost a double, into 36,000 on the Dow. And we've had steady, can't really call it downtrend because it's been more sideways. Speaking of sideways, so has the Russell. In fact, it's been much more sideways since the middle part of 2022. Similar, and pardon me as I draw lines on the chart, but similar to the compression that took place in the bulk of 2021, with the exception of the first couple of months, the Russell in 2022 has been sideways. That means we have another short sell or potential opportunity to trade off on the bear side of the Russell here against this 1900 print. Now, this is not necessarily a downtrend, but the end result is the same. And that is a fade. Fade means to go short into the highs against the risk of a breakout. So we'll say this, again, thinking back to this, that's the risk. And yes, as a trader, anything can happen. That's the risk against the reward of a downside path. That puts you on the put side of the option market. Long premium, long put spreads for a movement lower. Similar in the IWM. And we'll have to establish its trading range for the IWM. And that was back here, 2,209, and about 231 for 2021. But right now, your pivot points and therefore short opportunities in the Russell, the IWM, are going to come in around 190 and the midpoint target being about 176, lows being about 165. Something very similar is setting up for a resistance sell side short in the financial ETF, the financial market. We've seen earnings. We saw Goldman Sachs in today's session. With the exception of Emerson Electric, if the only Emerson did not have a sell swing today, Goldman Sachs would have been the leading sell-side stock or the weakest stock in the S&P. But Emerson was the leader, and we'll show that as it is coming down or trading lower from its upper resistance. Back to Goldman Sachs. Not a lot here. And in fact, we can look at some of the other financial companies. And if you want to do a little deeper dive, what we'll do is go inside the Analyze tab here in Thinkorswim. And the XLF, we can see the holdings of it and the weightings in the fund. Berkshire Hathaway, JP Morgan, Bank of America, Wells Fargo, Goldman Sachs, and down the list to other financial stocks that make up that XLF. You can, of course, trade the XLF itself and its option chain or individual stocks that make up the XLF. But to me, the financials are similar and tracking to the Russell, not in terms of how they are and the products that make up the Russell, but in terms of the sideways moving action or the consolidation, the box, volatility box, or the fact that we're at the top of the range. That does put us on the bear side of the market. Outside of that, just a quick look at the XLI. Quick overview of these main ETFs plays it down from its resistance high, just shy of 104. B is going to be materials, coming down from its midpoint. That's at 85 per share. We'll skip the energy and go straight to the XLP. XLP is your consumer staples. And this is what we're looking for current trades in the other markets. Is for the market, given that it's at an upper resistance point, for the next swing or move of the market to be down at least toward that midpoint, because that serves as a trading range or a probability distribution profile. What that means, again, looking quickly at that, look at your risk profile and look at how the probability analysis plays out. Flip that to the other side and you see that the distribution is there. In fact, let's put a volume profile just quickly on the XLP. That may show this a little clearer. We're looking for mean reversion. Mean reversion, again, takes us from above those profile levels back down to the mid. And so taking a look at that, we'll draw this. We'll go year to date because we're taking a lot of data here. We'll go year to date, and that makes a much clearer profile, taking a short from above and long from beneath. Similar logic in the XLV, which has completed its downside target. Again, these are things that are trade setups and ideas that have already completed recently, but the same logic is on the buy side of the lower bound coming back in. Back over to the markets themselves. For the XLF, we see it at the top of its range with a sell side activity potential. That's going to put you on the, again, the put or the bear side of the market. Where might the bond market be in the event we do see this sell side activity in the stock market? TLT does itself have resistance, and that's your ETF that you could trade. The TLT, that's going to be down from 107, 108 per share in the TLT. Looking at the bond price, that's ZN. ZN's going to come down from the 115 on the futures contract. ZV is going to be your 30-year note or 30-year bond. It has resistance about 131. And it is also, like the stock market, in a continued downtrend. So we'll be watching these as we get more earnings. In fact, this week is going to show us earnings from Netflix, 2.5 days, so 2 days, the close. That'll be Thursday. And then the other stocks will report earnings on the next week. Lots and lots of earnings, including lots of tech names at the beginning of next week. This week it's been all about the financials. We'll see other names, including Microsoft and some other key tech names and some other financials, which we'll be reporting. So we'll keep you covered with that. And we're going to have in tomorrow's session just one more look at some coming up retail sales. We'll have some minutes. Retail sales comes later in the week. We'll also have the U.S. Producer Price Index. That's going to come on Wednesday. So let's end by looking at our implied volatility for the next couple of sessions. This is the S&P futures. We'll go over to the SPX and see that its implied volatility right here is around 21%. That is a small spike for Wednesday's session. Otherwise, relatively flat volatility or normalized volatility, implied volatility with our expected moves playing off in the next few trading sessions. As always, be careful and safe. This is Corey Roseland with tonight's Theo video update for January 17th, 2023.